Most people who come to Dubai to buy property are excited, and that excitement is understandable. Dubai is visually impressive. The lifestyle looks attractive. The stories about growth and opportunity, they're everywhere. But after more than 20 years in and around this market, I can tell you something very clearly. Most buyers who struggle in Dubai don't struggle because the market failed. They struggle because they made avoidable mistakes. Not dramatic mistakes, not reckless mistakes, small, quiet mistakes that compound over time. My name is Kash and I'm a sales manager at One Investments based here in Dubai. In this video, I want to walk you through the most common mistakes first-time Dubai property buyers make. Not from theory, but from patterns that I have personally seen repeat again and again. If you're considering buying property in Dubai, avoiding these mistakes will not guarantee you success. Let's not get it wrong, but it will significantly increase your chances of having a good outcome. Let us start with the most dangerous mistake: buying based on hype instead of objective. Dubai generates noise extremely well. There are always headlines, there are always influencers, and there are always hot areas. There are always also projects that everybody seems to be buying. None of that tells you whether something is right for you. I regularly speak to buyers who start conversations with statements like, "Everyone I know is buying in this area. This project is everywhere online." Or even worse, "My friend bought here and they made money." These are observations. They are not strategies. Before you look at a single project, you should be able to answer one simple question. Why am I buying property in Dubai? Not a vague answer, a specific answer. Are you buying primarily for rental income? Are you buying for capital growth over time? Are you buying yourself a future home that you want to live in one day? Or are you buying to diversify internationally? Each of these leads to very different choices. If you buy for rental yield, you will prioritize different areas than someone that's buying on a long-term appreciation. If you buy for lifestyle, you will prioritize very different features than someone buying purely as an investor. When buyers skip this step, they become easy to influence. Everything sounds good to them. Everything feels urgent. Everything looks attractive. That's not investing. That's called reacting. The second major mistake is choosing a project before you choose a strategy. Many buyers fall in love with a project. They like the design, they like the brand, they like the marketing. Then they try to reverse engineer a reason to justify the purchase. This is backwards thinking. A proper process works in the opposite direction. First, you define your budget. Then you define your comfort level. You define your timeline. You define your risk tolerance. And finally, you define your objective. Only then do you search for a project that matches those criteria. When you skip this structure, you create internal conflict later. You'll then start asking questions like, did I choose the right unit? Should I have bought somewhere else? Why is this investment not performing how I expected it to perform? Very often, the project itself is not the problem. It was simply mismatched. A good project in the wrong hands becomes a bad investment. The third major mistake I focus on is affordability instead of sustainability. Let's break that down. Dubai payment plans, they're really attractive. They make property accessible to buyers, especially first-time buyers. They spread payments over time, which is a great strength. But it's also one of the biggest sources of trouble. Buyers look at the first payment, it's natural. Then they look at the next few installments, and then they think to themselves, can I handle this? But what they don't do is they don't zoom out. They don't look at the full financial picture, the total price, the total outlay, the handover amount. Are there any post-handover payments that need to be made? What is the service charge? Is the property furnished or is it unfurnished? Are there going to be vacancy periods if I'm looking at short-term rental? Are there going to be maintenance costs that will come in down the line? Buying property should not rely on perfect conditions. It should still make sense even if things change. If your income fluctuates or your expenses increase or the market tends to slow down, sustainable investing is boring. And boring is good. If a purchase only works when everything goes perfectly, it's a fragile purchase. The fourth mistake is underestimating the importance of exit. Even if you plan to hold for a long time, you should always understand your exit options and your exit strategy. Who is the future buyer for this property? Is this a mass market product? Or is it a niche product? Is it in a proven location? Is it at a price point that is consistent with future demand? Too many buyers focus entirely on just the entry price. They don't think about the resale, they don't think about the exit, they don't think about the liquidity, and they don't think about the depth of demand. A good investment is not just something you can buy. It's something someone else will want to buy from you later, and hopefully for a profit. Exit strategy does not mean planning to sell tomorrow. It means understanding what makes your property desirable in the future. The fifth mistake is assuming new equals safe. Don't get me wrong, new buildings, they look impressive, especially the ones we've got over here in Dubai. New communities, they look clean. New master plans, they look exciting. But that doesn't necessarily mean that new means low risk. Some new areas, they become major success stories, and others take longer than expected. And some, they never even reach their intended potential. Buying in emerging areas requires understanding the infrastructure timelines, the population growth, the connectivity, the competing supply. Listen, you're not just buying a unit, you're buying into a wider ecosystem. And if that ecosystem grows, guess what? You benefit. But if it doesn't, your performance can lag. Now, look, that's not to say that new is not bad, or on the flip side, that established is better, just that the difference needs to be properly understood before you go ahead and make that investment. The sixth major mistake that I see is misunderstanding the risk of off-plan. Now listen, off-plan can be excellent, but it's not magic. You're committing to something that's going to be delivered in the future. You need to understand the developer. What does their track record look like? What's their delivery history? Have they always handed over on time, or have there been projects that have been delayed? And if they have, then why? Is finance a strength for them? You need to understand all of this. The payment structure, the penalties, the handover conditions, but also at the same time, you need to understand yourself. Are you someone that's comfortable waiting? Most construction phases are 3 to 4 years. Are you comfortable with that? Are you comfortable with delayed gratification? Off-plan suits some buyers extremely well, and for others, it's really stressful. But listen, neither's wrong. Mismatch creates regret. The seventh mistake is choosing an advisor based on convenience. An advisor is really important. Many buyers speak to the first agent who contacts them, or the one that's the loudest, or the one that's the most confident, or worse than all of that, the one that's pushing the hardest. This is really risky. Your agent, the person that you choose, shapes your entire experience from beginning to end. They shape what you see. At the same time, they shape what you do not see. They shape what is framed as good, and they shape what is framed as bad. Good advisors ask questions. They slow things down, they challenge your assumptions, and they also explain the trade-offs. More importantly, they're comfortable losing a deal if it's not right for the investor. On the flip side, bad advisors, they rush, they oversimplify, they try to avoid difficult conversations, and that's usually a major red flag. They focus only on the positives of the project, and if every option sounds perfect, then something is truly wrong. Now, let me say something really important. Many people make some of these mistakes and they still make money. Markets rise, Dubai grows, timing helps, but relying on luck is not a strategy, or at least not a proven one. Avoiding mistakes increases your margin for error. It increases your resilience, it reduces your stress. The buyers who consistently do well over time usually share a few key traits. They are clear on what it is that they're buying. They understand their numbers. They think long-term. They accept that not every single opportunity is for them. They value guidance. If you are new to Dubai property, your goal should not be to find the perfect deal, because in my eyes, perfect doesn't always exist. Your goal should be to avoid obvious mistakes, and if you do that correctly, the market has a very good chance of doing the rest. In upcoming videos, I will break down how to build a simple property strategy, how to compare areas properly, and how to prepare before committing to a purchase. If you want honest insight into the Dubai property market, follow this channel and stay connected. And when you decide to move, you'll be doing so from a position of clarity, not noise. Thanks for watching.